Now let's talk a little bit about different things that you should be aware of based on the knowledge you gained from that last section. So the first thing that we talked about is there are a lot of people not getting the deduction for charity. They donate money to charity. I showed you that example of 4,000 donated to charity, and the max that could be would be 600 if you didn't itemize. So what else could you do? There's a investment vehicle called a donor advised fund. Donor advised fund is typically available in a financial institution, okay, that is going to give you the ability to set up basically a charitable fund without the without the painstaking of creating a trust, because you can create charitable trust, right? Without that, it's going to be more straightforward. And it allows you to put in other securities than just cash. And that's an important piece because let's say you have a highly appreciated stock. Well, we already talked about if you sold a highly appreciated stock, you would at least get taxed on those long-term capital gains at most likely 15%. And if you're over the thresholds I showed on the net investment income tax, maybe 3.8. So maybe you're at 18.8% federal tax on selling that asset. Let's say you're charitably inclined, but you're using your standard deduction, you're not getting itemized deductions. So here's a method of being able to get that as a deduction. Okay. Let's say again, my mortgage interest was 15K. My taxes, property and state, was capped at 10K, right? So in order for me to itemize, I need to make like a big charitable donation this year, right? And I don't want to just donate cash from my checking account to like a charity or two. What I'm going to donate is $30,000 of a mutual fund that I've made a boatload of money on that I don't want, or stock that I don't want to sell and get 18.8% taxes based on that following example. So guess what? What have I done? Well, now I have enough money, right? In this example, this is $55,000 that it's all added up. That can equal my itemized deduction. It's greater than the 30,000, right? It's greater by 25,000. So essentially what happens, guys, is I get 25K out of this 30K donation, and I don't even have to sell the stock and get taxed at that. It's a double benefit. It's a double benefit. So if you're in that situation, I would implore you to not donate cash. Donate the security, avoid the taxation, and get the deduction by making that larger contribution into the fund and then using the fund to donate out to your charities over time or keep it growing and it grows tax free. And it essentially becomes a legacy fund for you in terms of donating to charity in the future. So this is a great way to think about building that charitable side of maybe what you've been thinking about doing for the future, getting some tax benefits for it.